Let's welcome our first corporate guest on board, Rajesh Jejurikar, who is the Executive Director and CEO of the Auto and Farm sector at Mahindra & Mahindra joins in now. Rajesh, thank you as always for joining in, especially on a day like today where we celebrate 25 years of business news excellence at CNBC-TV18, and you've been a large stakeholder of that journey. So thank you for being with us. And it's been, of course, so many years of excellence at M&M as well. As I spoke about earlier, so many years of wealth creation. How are you feeling about the couple of years to come, and what's the big vision at your end?
Sonia, Prashant, Nigel, firstly, congratulations to all of you CNBC TV18 teams for what you've accomplished. And the 25th anniversary is, of course, something very special. So it's, real privilege to be with all of you here today on this very, very important milestone that you've accomplished. And I was just wondering what you're going to be doing differently on our 25th anniversary. I mean, one is, you get all of us to chat with you, but is there anything you're doing differently?
Well,
sorry, I'm flipping this back on you.
For one thing, we went and we rang the bell, in our newsroom. We had an entire newsroom here with us. So that's something we did differently. But, I'm glad you brought this point out cool. Because in order to stay relevant, right, over decades, especially in this digital era, you need to do a lot of things differently. And I know that M&M is doing a lot of things differently as well, especially with all of your new launches. But you tell us, what's the best way to do this?
Well, like you said, it's we all have to be very excellence-driven in everything that you do, and that's really the way you positioned your 25 years, and that's the way we position our business, because we believe success is going to come out of doing things really well, raising the bar at every stage, and that's what we're trying to do with our new products, and products and experiences is really what drives value creation. So we are focused on our part of the role, which is bringing exciting products. We brought some really good products on the tractor side. Oja more recently under the Mahindra brand, very tech loaded. We've got Swaraj Target, which is a lightweight tractor, the whole new Swaraj range with the Dhoni, with Mahendra Singh Dhoni as the brand ambassador. And of course, some very exciting SUVs. Our pickups have been doing very well, and last mile mobility electric. So, it's been an exciting time. And really, like you said, celebration should be around excellence.
Okay. Since you're talking about numbers, right, let's get it to the brass tacks numbers. I mean, this month in November, the wholesale sales were up 20%. And that's not a small achievement. 20% month over month for the last many months is something that is perhaps hard to sustain, especially in this competitive environment. I just want to understand that, is it going to continuously be led by the growth in SUVs? Because you are putting some capex on board as well. Your SUV production will go up. What is the kind of numbers that you're looking to achieve over the next couple of months?
Can't give you specific numbers, but just to break up the numbers that you spoke about, the SUVs grew 32% in November. So, we did a volume of close to 40,000, and that was a 32% growth. Pickups, which is on a very large base, and in the less than 3.5 ton light commercial vehicle category, we have a very strong market share. We are, in the range of 48, 49%. So very strong market share. We've gained 4-5 share points. There we grew 13%. So that's very credible on a strong, on an already high base. So overall, I think these are very good numbers. To your specific point on how will we sustain momentum, in this business it is about, especially in the auto side, about new products. So we would have some new products on the ICE, and then the whole electric portfolio, which will come in early 2025. So we believe that will help open up a new category of customers, people who are looking for exciting design, technology, and a whole totally new driving experience, which comes out of the very quiet electric powertrains and very peppy, very powerful, very fast. So we believe that's what will drive future, and that connects to your point on driving excellence.
Rajesh, hi, good morning. Thanks for joining in. Prashant here. Let me just sort of take this towards
Prashant,
tractors.
Hi, morning.
Hi. Nice to see you, Rajesh, as always. On a year-to-date basis, tractor sales are a little subdued, right? But we are getting into the election season. typically what happens ahead of general elections? I mean, there is more money in the system, that is for sure. Should we expect a better outlook over the next, say, 2 quarters or so?
That's Prashant, actually a very interesting question. So 2 things happen around elections. One is, you're right that typically spending in rural does go up, but the election period itself is not a great buying period, because very large chunk of people are engaged around election campaigning. So the election months and the lead in into that, normally in those states or whatever, is normally a little bit of a slow time. But that catches up later. It's like people are postponing to a time when they have a little more time to go and evaluate and buy products. But of course, this year the tractor industry is slow. We were anticipating that. We had started by saying low single digits. More recently, we are saying it will be flattish for the industry for the year. We have gained market share again about over 1 share point, and we have been showing some growth as a consequence of that. So in November we grew 4.7%. So what is leading to a slowdown? I think it's been a little bit around the monsoon timing. Some of the states in the south haven't really had very good rainfall, but it's also a very high base out of the past year. Last year the tractor industry was at 9,50,000, which is a very, very large industry size, and we were expecting that on a high base there will be some kind of a tapering off for a year or so.
Hi Rajesh, Nigel on this side. Rajesh, first of all, congratulations to you and team as well with regard to the kind of launches you all have done the last few years. I don't think I've ever got so many requests that can you speak to the management to get our delivery on time, because there's so much of demand for some of the vehicles that you all have launched. But the next phase of growth is going to be the EV space. Tell us about the rollout plans out there. I think you have 4 or 5 launches planned in the next 3 or 4 years. So tell us, when do we see the first EV and how do you expect that to ramp up?
Yeah, so we've really put out, unlike what we do in the past, the whole portfolio of products. The first vehicle or 2 out of that will happen in early 2025. Production would start in 2024, but we would get it to market in early 2025. We're very excited about the way they're coming. They're testing very well. They've run more than 300,000 kilometers already on the tracks cumulatively. Several vehicles running on our tracks, and they're performing very well, and we're benchmarking them with the best in the world. So they would be a very exciting portfolio of products. Of course, many of you have seen the design. They are really, really striking, strong, powerful designs, and but there's much more to it than just the design. So wait and watch that space.
Okay, that's on the EV space. I just wanted one thought from your end on the operational performance. I know you won't want to give me any numbers, but if you look at the margins, right, you map the margins over the last 5 to 6 quarters, you've stayed in that range of around 12 to 13.5%. Now that you're getting into, over the next couple of years, getting into the electric vehicle space, SUVs are doing very well, tractors are coming back. Is there scope for your margin profile to rise above this 12-13% mark?
Yeah, Sonia, so when we talk about margins, we often kind of guide that when you look at a total margin, it's not really representative, because we have 2 different businesses with different margin profiles. There's an auto business which has gained a lot of margin. It's now, as you saw in the last quarter numbers, we've got to 7.9% for our auto business. The tractor margins are, we say typically, we believe is a good margin in the range of, for our core tractor business, between 17 to 19%. We are in that region. But as the auto portfolio is becoming stronger and growing very fast, the weightage of margin is bound to be affected, because auto which is growing much faster at the moment, is on a 7.9% margin profile. And when you compare that with farm, which is on a 17% margin profile, obviously the weighted margin is going to come down as auto grows faster than farm. Does that help answer the question? So I think we are basically growing auto margins very well. Farm margins, are flattish given the nature of the industry, but we often say that irrespective of what's happening in the industry, the tractor margins operate within the range of 17 to 19%, which has really been our strength.
All right, Rajesh, we'll leave it there. Thank you so much for joining us here on this special day and speaking with us here. Thank you very much. And thanks for all the support over the years and look forward to more.
Pleasure. And have a great week of celebration, all of you.
Thank you. Will do. Appreciate it. Well, let's